Hello and welcome to this very special episode of our series at CNBC TV 18 called Global Markets Turning Point, with a question mark. It's still a question mark because while increasingly over the last 4 or 5 weeks, hopes have been raised that we may slowly be clawing ourselves or clawing out of this vicious bear market that has plagued this world for the last 1.5 years. We don't know the answers of whether the process of rebuilding and recovery have started, but some experts are beginning to say for the first time since the 2008 correction happened that maybe we are slowly getting out of the woods. It's a trillion-dollar question, but it needs to be asked. Mark Mobius of Templeton actually signaled it a few weeks back when he said in May, early March, when the world was collapsing or the world of equities was collapsing, that he saw great value in emerging markets and many global equity markets, and we may see a very good rebound from there. Indeed, the rebound has come. He is here to tell us today whether he thinks this rally has much greater legs and whether we are indeed in the process of bottoming out and starting another bull market. Mark, thanks very much for joining in. I'll start with that big question which everybody is asking today. Are we still in a bear market, or do you think we've turned the corner?
I think what we're doing now is building a base for the next big bull market. You'll notice that the pricing is moving up and down in a relatively large channel, and that channel has an upward slope. So if you look at the valuations, if you look at the flows of funds, if you look at the amount of money being printed by not only the U.S. but governments around the world, if you look at money supply going up, as soon as the velocity of that money increases, then you will have a bull market in a big way. But right now we're building that base. Of course, if you look at the difference from the absolute bottom in October, we're up about 20%. And in some cases, we're up more than 50 or 60% in some of the markets around the world, emerging markets, that is. So you might say, if you define a bull market as being over 20% increase, we're already in a bull market in some places. But for the true long-term bull market, we'll have to wait a little longer. But the base is being built now.
Do you think the worst of the bear market is over though, Mark, from a pricing point of view? Do you think we saw most of the price destruction in the last couple of big falls in October and March? Or do you fear in this consolidation phase those lows could be retested or even violated?
I don't think they will be violated. I think they might be tested, but it would be part of this base building process that I mentioned. I think the worst is over.
So you're not ruling out the possibility of the S&P in the US, for example, going back and retesting those 666, 670 kind of levels?
Well, the exact level, of course, is impossible to give. No one knows where we will be at any particular time. But what I'm saying is that the valuations look very attractive, not only in India but in other parts of the world. The money supply is increasing at a fast pace. Inflation is coming down. With that, interest rates are coming down. All of these factors have a hand to play in pushing stock market prices up.
Purely in definitional terms, Mark, how would you describe the rally that we've seen from the bottom of the 9th of March? Some people are calling it a bear market rally, no more than that. Others believe it's something more than that. How would you define it, what we've seen so far?
Well, I wouldn't say it's a bear market rally. I would say that we are now at the cusp of a new bull run for emerging markets at least. I can't speak for the developed countries, but for the emerging markets at least, we're seeing that. The fundamentals are very good. As you know, foreign reserves are high in emerging markets, much higher than the developed countries. Debt to GDP ratios are low, again, lower than the developed countries. So all of these factors point to a pretty optimistic scenario for the markets.
You spoke about the money which is being printed and how much can come in, but before we get to that, let me ask you about whether this rally has left out a lot of investors, because there was such a lot of disbelief at the first part of March, Do you think a lot of global investors have managed to participate in this rally, or is there a general left-out feeling of people on the sidelines?
I think there's a general left-out feeling. I think many of the global investors are heavy in cash. If you talk to money managers and you look at their portfolios, you'll see that they have a lot of cash. In some cases, they have as much as 90% in cash when we look at the hedge fund operators. So there is a lot of cash waiting for the time when they want to come back in. If you look at the spread between emerging markets debt and U.S. Treasuries, you'll see it's still quite high. It's about 7.5%. That has to come down, and it's beginning to come down before the markets really come up in a way that they were previously. So everyone is very cautious. If you pick up the newspaper, you'll read a lot of bad news. People are concerned, and therefore they don't participate. And then when they see markets go up by 20–30%, as I mentioned, then they feel a little disappointed that they didn't participate. But then they say, well, this is just a bear market rally, and I better wait till it comes back again. So that is the psychology we're facing now. And the big international investors have not really come back in.